Part of my job as a real estate broker is to study the market. I get asked all the time, how's the market? Well, I want to share with you a couple slides, and the rest of them I'll throw them into this email down below. But I want to share with you a couple highlights of some of the market data that I've recently been looking at. So this first one here discusses home prices over the long term from 1990 all the way up until today. In 1990, the average home price in the US was just a little bit under $100,000. Now you might be thinking like, wow, that is really, really cheap. And today the average home price is likely over 400,000 when we look across the entire country. This green line here in the center shows what we refer to as the 4% long-term appreciation trend line. So you can see that as we've gone over time, there were points in where, no surprise here, the early 2000s, '06, '07, '08, where prices spiked above that trend. And then what happened? Of course, they crashed down below. And we've looked at times too where in the last few years, prices have gone up above. And you may be thinking, well, does that mean that the market's going to crash down again? We saw this happen before. Oh, not so fast. The interesting thing when we look at this long term trend is imagine this. If you're thinking right now, this $400,000 price point as an average across the country is really high in 2026. My question for you is this. If you were looking at this same thing in 2036, would you still think that 400 and something thousand was high? Because you know what? I guarantee you in 1990, they thought 96,000 was high. And even in 2006, I bet they thought 222,000 was high. And yet when we look in reverse, it seems like it's nothing. So my point here on this first one is if you're planning to buy real estate and stay in it for a long time, then buy real estate. It's always the right time to buy the right piece of real estate. Second one, now we're looking at inventory. The way that we describe that in our world in real estate is through what we call months of inventory. Maybe you've heard of it also called a burn rate or absorption rate. These are the same thing. So months of inventory means if at the current pace that houses are selling, if no more came on the market new, then how many months would it take to basically burn through or sell through what we currently have in inventory? So simple math, let's just pretend that there's 1,000 houses selling every single month. And if there's 5,000 houses available, then simple math tells us it would take us 5 months to get through all those. That's the idea. Okay, so now let's look at our months of inventory here. Well, way over here on the right, we're in, again, national averages, about 4, 5, maybe 6, depending on where you are, months of inventory. Now, people ask me, is it a buyer's market? Is it a seller's market? Here's the technical definition. 6 months is basically the neutral line. Anything above 6 months, 8 months, 10 months, 12 months of inventory, we're talking that being a buyer's market. And quite likely you would have things where houses sit on the market for a long time and prices come down. Anything less than 6 months would then be a seller's market where prices will increase and homes will quickly move off the market. So this dashed green line right here in the middle shows where that 6 month equilibrium is. And really for the last, 10, almost 15 years, we've been in actually a seller's market. Now, understanding that everything about real estate is hyper local. So your particular municipality, your city, your state, your neighborhood might have very different numbers than what we see nationally, but you get an idea from the national average. And then finally, we're looking here at mortgage rates. People, I hear this from people all the time. They go, oh, mortgage rates are so high right now. Well, let's get clear on something. Are mortgage rates historically high? No. Over here is where we are. Hovering right now, today in early 2026, kind of around that 6% range is where we are in today's world. Let's look back into the 1980s. Oh my gosh, we had 16% interest rates. Now, in the last, again, 10 to 15 years, we've had historically low rates. So, are the interest rates historically high? Historically, no, they are not. Are they relatively high? Well, sure, I could get on board with that. But ultimately, it's very uncommon that buyers will come to me and say, hey, because of the interest rate, I want to buy a house. Because of the interest rate, I want to sell a house. That's very rare. What's much more common is that someone comes to me and says, hey, our family is growing or moving, or we got a job promotion, or we had a change in family situation, or we just want something bigger, or we want something smaller, we want a different part of town, we want a different state, whatever that situation is. Those are the scenarios that people come to me and say, I need to buy or need to sell. So it's interesting that these are conditions. I'll agree with you there. These are conditions of the market, and yet it's very, very uncommon that these types of numbers are actually what drives somebody to buy or sell a house. Generally speaking, it's more of a family situation, a life scenario that drives a buy or a sell. If you've got questions on, is it the right time for you to buy? Is it the right time for you to sell? Is it the right time for you to invest in real estate? Or you simply just have a real estate related question? That's why we're here. Reply to this email, call, text, anything you can, get in touch with us. We are always here to answer your questions.